Cryptocurrencies have proven to be a fantastic investment for many, and especially for me. Now, not only have we seen the staggering rise in Bitcoin's worth, but also in popularity. The rise of both Bitcoin and Ethereum, which has been laying out the foundation for the future of finance, DeFi. It can be felt through the entire crypto market, and I guess it's no surprise that thousands of investors are wondering what to do next. Do you hang on to your assets to make a larger gain in the future? Or maybe perhaps now is the right time to cash in on your investments. You see, a significant part of any investment strategy, let it be crypto, let it be stocks, that actually doesn't really matter. It should include an entry as well as an exit plan. Now, whether you invested years ago like I did, in time before the boom, or whether you just only are starting to trade cryptocurrencies, it's essential knowing how and when to enter, as well as when to exit the market. In today's video, I want you to discover how to make the most out of your cryptocurrency investments. You see, having a predefined strategy can help you to maximize gains and minimize losses. But before we start, I want to welcome you to Crypto Never Sleeps. And in case you follow this channel, well, then you know exactly that I share when I buy and I share when I sell. Having said that, it goes to show that there is no other YouTube channel out there that has done what I have done. Shared when I bought, shared when I sold. I even told you that we would go in and buy the market leaders of tomorrow at a 50 to 80% discount. 50 to 80% discount from the all-time highs. And that's what we're basically going to be looking at the next few weeks if we're going to see this continuing. My name is Nico Harachi, and I am number one.
Ladies and gentlemen, he's young, he's handsome, he's a prophet, he's a poet. They know it. I must be the greatest. I told the world.
How do we exit crypto with profit? I also want to let you know that it is not my intention to exit the crypto market and then go on vacation and never come back. No, sir. It's only about entering, exiting, only in order to acquire more coins, to acquire more wealth. That is what it's really about. Now, you know, we can't talk about an exit strategy if we wouldn't talk about an entry strategy. So, from my point of view, if you're new to crypto and you're thinking, wow, I want to enter. I heard about, brother Louis and sister Shelly and brother Jamal, and they're all doing so great. They're all doing so great. Lots of money. How do I enter? Well, you never know. You see, that's the thing is, you never know if you enter today, is it going to go up or is it going to go down? That's risky. So from my point of view, if you're completely new, I would advise you either the dollar cost averaging, where you really say, okay, the next year, every month, I'm going to put something in because you will get it higher, you get it lower, you get it higher, get lower. I think that's a good way of entering the market. But remember, this is not financial advice and it's important. You do you, I do me, as long as you don't do me and I don't do you. Now, the second entry is my personal, the one that I've developed for myself. And I call it the 3-step process. So when I want to enter a new market, I don't know why I like the 3, like 1, 2, 3. So I will take, it doesn't matter if I want to put in $100, $100,000 or $1 million. I want to do it in 3 steps because you don't know where the market is going to go. So that's how I do it, right? So I put aside, let's just say 100, and then I start with 33. Furthermore, what I then do, I don't just invest in one coin. Or I wouldn't want to do that. I would want at least take 3 coins. 3 coins. Because you never know. And then in that instance, I also wouldn't take the 3 biggest. I would kind of try to adjust them to different risk level. But hey, this is the entry. We are talking about the exit. I guess the biggest question is, do I sell? Do I hold? What do I do with my cryptocurrencies? And when? When is the best moment to sell? And I'm just gonna tell you. The only enemy you have is time. Timing the market, that's a vicious thing that nobody, not even Warren Buffett masters. In fact, the only one who mastered it this time was myself. And that, let's be honest, that was luck, right? I mean, it's luck. So what is an exit strategy? Well, an exit strategy is it's how you kind of plan your financial assets. It's how you kind of plan when you enter a market. You should set your goals, determination on what it is that you want to achieve. But basically, the exit strategy is that you should cut your losses. It can also be like, some of you, I don't like the casino, I don't go to the casino. But, if somebody goes to the casino, you'll know what I'm talking about. Is like, when you enter the casino, you should kind of like make a plan. What are you willing to lose that night, right? So, I had a friend and he was addicted to gambling. And I mean, God knows, he would just go in there and he could never stop. But that's a bad thing. Even when you go into the casino, you should know, tonight I'm going to allocate this amount of money. If I'm going to lose it, hey, I'm totally fine. We're all more happy when we win because it's going to feed to our ego. But that, my friend, can also be dangerous. But nevertheless, so you want to have an exit strategy. You want to have an entry strategy and you want to have an exit strategy. And you want to have the exit so there's going to be no bad surprises. And what I also want for myself and what I've learned the hard way is that you never want to exit the market completely, especially not when it's going up. You want to take profits, but I cannot state how important it is. The trend is your friend, because you never know when the trend is over. So why do you need it? Well, of course, why do you need an exit strategy? I think that goes without saying. You need an exit strategy because what do you need? Did I make it wrong here? Yeah, you did. Because, that's another thing. For example, if you hodl, that's another word in the crypto scene. Hodl just means that you buy and hold and hold. So you hold it too long due to greed or emotions because you kind of like build up love to this coin. This can result in massive losses. Massive losses. It can result in a scenario where your coin will never ever go back to the all-time high where it was. And you can lose time, you can lose money, and worst of all, you can lose faith in yourself. And don't ever do that. Don't ever do that. You're the best. You're number one. So there is one thing that they talk about. I don't know if you're young and you've been in this industry for a long time, then you know FOMO. I don't like that word. I hate them. But anyway, the fear of missing out. But it's true. So we all have this fear of missing out, right? And I would say to an extent, the art of making money, the art of being a great investor really comes down to psychology. It really comes down of identifying human greed, human nature. That's just how I look at it. So what are the exit strategies? I told you I will just mention a few generics and then come into mine. Well, obviously a good one that works well is limit stop orders. I guess you know what that is, and in case you don't know, well, that means that once you buy a coin, you can already put a predefined price where you want to sell that coin at. So basically, let's say you go in and buy Bitcoin at 30,000, and you say you are ready to take a 10% loss, so you already put a sell order at 27,000. That way you can limit, that's what it's called, limit orders, you can limit your loss. Now let's get into something that is a little deeper, and that is the step-by-step method. And it's not completely what I do, but I think this is better. So the step-by-step method will allow you of course it allows you, but that's what you should do. You should set a predetermined price of where the coin will hit, where you will sell a certain percentage of your position. Now, so imagine this. You go in, buy a coin, it goes up. When are you going to sell, right? Because I will get to the mark. I will get to what people usually do. It's important that when you enter, what are your expectations? Do you want that coin to go to the moon? Well, but then you just got to hold. I don't know, It's very rare that you can really find a coin that goes to the moon. I think it's more important that you understand for yourself what is the risk? What is the loss that you're ready to take? And if it goes up, put a predetermined schedule where you're going to say, if it's going to go up 20%, I'm going to sell 5%. If it's going to go up 50%, I'm going to sell 25%. Try, and that's what I like to do. I like to get my initial investment back. Anyway, the step-by-step method is more that the market goes up, you sell a little, you sell a little, you sell a little. But as we write here, there's no golden rule that then will lead to a definitive success. But however, it does prevent greed, because selling too late, that can go bad. So what many experienced investors do, they will always keep a certain percent of their holdings in the market, just in case, and this is important for crypto, just in case of a bigger upcycle. Because we firmly believe in the project we have invested in. It's very important. I want to read it again. So even if you find a coin that you like, that you made profits, you take something out by the step by step. But you will still leave something in, just like I do with Metis, just like I do with Ethereum. Remember, even when I said I'm going to take 85 to 90% out, I was still 10% in, and I had made huge gains, right? So my 10% was probably even more than what I started with. And I kept it there because I was not sure that the market was not gonna, continue just going up. Because sometimes the crypto market is volatile and it tends to go one way when it goes. So you don't wanna lose out on the opportunity, the upward opportunity, but you, god damn it, don't wanna lose it all. Trust me, I've tried it. So the next one is the one that I use. When I enter the market, I've been in crypto now for, since 2016. So I've been around and I've been, lucky. But the most important thing for me, even when I open new positions, and if you follow us on Telegram, you will see I constantly say when one of our coins hit 100% X, I take profit. I'm not your financial advisor at all. So it's hard for me to give you specific. But I'm a very, very conservative and careful investor. So I like when my coin go up 100% or more, I like to take out what I invested and put it in the right. And if you see what happened with Metis, that we up 800 and something percent. If you joined me in the first cycle, we had many coins where we did 1,000%. So taking profits equal to the invested amount. This way you make sure that no matter what happens, you can never lose more money than you initially invested. And not only that, then if you don't need the money, if this is money that you set aside, well, then you can always enter into other new coins. And if you believe, I believe this is the future of finance. I believe that the future of finance is being built right in front of our eyes, and I believe it's being built on the blockchain. So, it's gonna trickle down. So many great coins coming. We're gonna look at the market cycle psychology, which also is called the Wall Street cheat. If you're an experienced investor, you know exactly what I'm talking about. It is amazing that we, as human beings, all tick the same. Doesn't matter if you're from Africa, if you're from China, if you're from Denmark, if you're from Iran, it doesn't matter. Human greed and human awareness of oneself, we tend to overestimate, or for that matter, underestimate ourselves. Why is it that I always like to talk about the lion? It's attitude. It's about who we are, not defined by market psychology, but we can tend to believe it. Anyway, that's a little deeper matter. So look at this cycle, because it really, and if you look at this chart, I think this is actually the crypto market, but it looks like it's Ethereum, but you can go in and you can see any kind of chart that looks similar like this in the history. This is what people feel. So the first one is what they call hopium, right down on the left here. I don't know if you can see it. A recovery, people think that the market, let's say this was after the dot-com bubble, they think a recovery Hope is possible. Then we go up to optimism. Oh, the rally is real. Yay, something is happening. Then we go up to believe. Time to get fully invested. Even maybe with leverage. And I'm telling you guys, please, this is financial advice. Don't use leverage. It ain't gonna turn out good. So on the top here, and if you remember here where we got euphoria, I'm the next Warren Buffett. We're all gonna be rich. Now, if this is Bitcoin, right? Right here on that day, I didn't say I was gonna be the next Warren Buffett. Actually, that was May. When was it? This was March. It's around March 14th. I said I'm 50% out in cash. Now, I was lucky maybe that I got that right. Anyway, so it went down. We got, retraced, but it still went up. And actually, Bitcoin went higher than it was here. It only went slightly higher. And when it went higher, I said then, 22nd of April, a little bit later, 3-4 days later, I said, I'm going out 80-90% in cash. Sweetie pie, I'm gonna cash, I'm gonna take around 80-90% out. And she said, well done. So, I don't know why I said it. Did I study this chart before? Did I just study the Wall Street cheat sheet? Perhaps. Who knows? But the problem is, we all think here. Now, I'm not gonna see the euphoria. I'm the next Warren Buffett. What I am gonna tell you, what you can watch out and look out for, is when the news, the media, when they start talking about Bitcoin, when they start talking about Dogecoin, when the media and when grandma and the taxi driver and all this and the milk ladies, when they start talking about, the new trend, you definitely know it's over. And I can tell you, it's funny. Back in 2017-18, my friends and acquaintances, they knew I was in crypto. They all called me in December 2017 and January 2018. I mean, at that time, I didn't know that it was going to go down, right? I didn't say buy, because I don't recommend anything. But it's funny when somebody you haven't heard from a few years calls you and wants to know what's up. Well, then you know it's time to sell. Anyway, so we went down. So we all think, and this is where that's why I say, don't get emotional. You cannot be emotional. That's why you need a strategy. Anyway, so we go down and we go up. But you see here, exactly these highs. Do you see it here? Doesn't that look a little bit suspicious if we want to compare it to Ethereum? It does, right? To me, at least it does a little bit. But that's just me. I don't know. End of the day, I don't know shit about crypto. But so it does look that we could have a mighty fine downturn. So you see, we're probably not gonna really hit through. I don't know. I really don't know. But that's why I took some profit out. So we are really pushing. Bitcoin still has a lot of space to go to 64,000, right? We have 50. Ethereum is dancing with it. So here we say we just need to cool off for the next rally. Yeah, sideways, right? Cool off. Just gotta wait. Did you see this weekend? If you follow, by the way, in case you're new to this channel and you want to stay on top of the crypto world, well, you better hit that notification bell as well. Because whenever a flash crash appears, I am here. And they will appear. And that's when you can, in the weekends, within an hour, probably get some of the best coins between 10 to 20% discount. So, I don't know. It looks really similar. Are we going to push up? Or are we simply just going to go down? I don't know. I really don't know. But anyway, here we need to cool off. Then we go further down. Anxiety. Why am I getting margin calls? This dip is taking longer than it's expected. This is not how I thought it was going to be. Sister Shelly, she told me it was going to be different, right? And Sister Kristalina from the IMF, she told me that the CBDCs, they should be out next year. You see, never underestimate the markets. They can stay insane much longer than you can stay sane. That's just a fact. Once we keep going down, then the denial comes. Denial is, my investments are great. They will all return to the all-time highs soon. All I gotta say to you, sweet, sweet friend, don't be a pigeon. Don't be a sheep. Don't listen to people trying to soothe each other. Don't be in denial. It's important. You see, listening to other people that are going through the same, that are emotional, that don't know about investments, you don't listen to them. Anyway, we will continue down. That's the market cycles. And then panic comes. Shit, everyone is selling. I need to get out. And you get out with 10% of what you invested. Not you, but this is historical. That's what I did. That's exactly what I did. And this is why when you look at this pattern, that when I said I'm going to go 50% in cash, when I said I'm going 85 to 90% in cash, I knew I was going against the trend. I also knew beforehand it is going to go down 50 to 80%. And that's when you pick them up. And that's all I got to say about that. Not more, not less. So that's kind of it for me today. I hope if it gave you any kind of value, then let me know down below. Hit like, smash, subscribe. And before we end and, you go home to Kitty, I just want to let you know, if you want to make money in cryptocurrency, you need to start doing this. There is no free lunch on Wall Street. There's no free lunch on Crypto Street. But there certainly is a huge amount of opportunity. Stay safe, stay home, and don't forget, Kitty loves you.